Hey, part two, Tidbits TJF Fridays with my CPA, Millennial Advisors. Stephen will be continuing to talk about our favorite topic, taxes and saving money, most importantly. So listen up, see what he has to say, and I hope it helps you. Thanks for stopping by.
Is there any other write-off that seems unique that people don't really pay attention to that we should pay attention to this tax year season?
Actually, in 2008 and until 2020, there was a credit that's, and it's important to note the difference between a credit and a deduction. A credit is dollar for dollar, giving you tax money back, essentially. A deduction is reducing your income so that the income that you're taxed on is less. So a deduction and a credit are not equal. A credit is actually knocking money dollar for dollar off of your tax bill versus a deduction, which is just knocking a percentage of the income. So when you look at a credit, it's far more valuable than a deduction. The first-time homeowners credit is actually, they're still working to pass that bill, but if they do pass the bill in 2023, it will be retroactive to 2021, and it'll apply to the 2022 tax year. So we're looking for that legislation to pass sometime early this year, hoping for it anyhow. And if so, you can always amend the tax return for 2021 to get that credit, and it should be significant.
How much of a credit is it supposed to be?
Up to $10,000.
Oh, and then what dictates if it goes up to $10,000?
Well, it depends on how much you paid into the home, down payment that you paid into the home.
Oh, so it's a credit for your down payment.
Correct.
So if someone had a down payment of $30,000,
it would be $10,000.
It would be $10,000 versus $15,000.
$10,000 still. $9,000.
Really?
Right. Yeah, it's a cap, so it's not an actual percentage
Like
of anything.
$10,000 they're going to get back from the government.
Correct.
Okay, so basically everyone buying a house, if this passes and they're a first-time home buyer, will get the $10,000 back because there is no such thing as a down payment less than $15,000 in this area.
Yes, in this area, that is the case.
When do you feel this will pass?
Hoping for something before March. So
Really? And it's retroactive to 21.
Correct.
Now, what if the person purchased the home in 21, but they sold it in 22? Do they still get the credit?
They would still be eligible for the credit. They would need to amend that tax return, the 2021 tax return. And again, if they owed, let's say they owed $12,000, or maybe they got a refund of $10,000, they would receive another $10,000 because
Wow.
tax liability would be significantly lower.
And what's the name of this?
It's the first time homeowners credit. And actually it was in place until 2020 when it expired. And that's the reason that they're working on. And this hasn't passed. This was a promise of the current administration, and it's expected to be. There's expected to be a hard push for it. Nothing's passed yet, but it's optimistic. We're optimistic that it will.
And that we would get answers on that in March.
Yes.
Wow, that's amazing. Okay, that'll be great news to share with our clients. That'll be nice for them. Okay. Now, what about for like sellers, home sellers? Is there any like deduction for them?
Well, home sellers can actually look forward to an exclusion. So we introduce another type of tax relief, an exclusion from the first $250,000, $500,000 for joint filers, of the sales of their primary residence. So
Isn't that already something? I forget the name of it.
Yes, that.
But you have to live there 2 out of the 5 years.
Correct. So a primary residence would be something, and actually, it's 3 out of the 5 years.
There's a name for that. Isn't there something like that already?
It's a capital gains.
Capital gains tax. Is that the same thing?
Correct. Yes, it is.
Oh, okay. Yeah. Okay.